but as my colleagues on the other side of the aisle have already expressed, simply eliminating the penny without a well-crafted plan for the orderly phase-out of the penny won't accomplish that goal and could actually make things worse. As it stands, there's been no time provided for states, retailers, or consumers to prepare for a penniless economy. We need to do that responsibly and thoughtfully. While I appreciate the efforts of my colleagues, Congresswoman McClain and Congressman Lucas, in getting the Common Sense Act into the place it is today, I do have some concerns with the current text. In order to discuss those concerns, would my colleague and friend Congressman Lucas be willing to engage in a colloquy with me regarding the Common Sense Act?
I would be pleased to.
Well, thank you. One of my concerns, Congressman Lucas and committee members, is surrounding the current version of the Common Sense Act is that it does not provide for a plan for the orderly withdrawal of the penny from circulation, which I believe is essential for minimizing disruptions from this momentous policy change. Additionally, while I greatly appreciate the fact that this bill seeks to change the composition of the nickel to lower costs, I would like to see technical changes to the composition requirements of the nickel to require a tighter weight specification that narrows the electronic signature and makes the coin more secure, as well as helping to get the anticipated cost of new nickels below 5 cents. Lastly, during the phase-out period, I believe it is important that the Mint continue to produce pennies to ensure that the unanticipated shortages do not occur. At this time, I'd like to ask my colleague, Congressman Lucas, if he would be willing to commit to work with me to address these concerns.
First, let me state I very much appreciate the sincerity of the gentleman's efforts in addressing this issue. It is a very important matter, as stressed by the ranking member. I would note for the record that there are 100 billion 1-cent pieces in circulation. And by the way, to my numismatic friends, I apologize. It is a 1-cent piece, even though we commonly refer to it as a penny in the United States. That's an English coin. That was never an American coin. And I would also stress to my colleagues, yes, as we work through this process, I would enthusiastically, I believe, Congressman McClain and I would discuss these issues with you.
Well, thank you, Congressman Lucas. And with those assurances that I've received, I will vote in favor of the Common Sense Act, and I'll encourage all of my colleagues to do the same, and I yield back the balance.
Gentleman yields back. Does the gentleman from Ohio seek recognition?
I do move to strike the last word.
Gentleman's recognized for 5 minutes.
Thank you, Chairman. I want to thank you and Congresswoman McClain for working on this common sense proposal. I'm glad to see, I share Mr. Rose's passion for cash. I hope that we do move his bill locking in the legal tender currency of the country as an actual means of payment. We're seeing too many places where cash isn't accepted. And, I applaud many of our Democratic colleagues who share that view as well. So I hope this Congress, we have the ability to protect cash. But the idea that you can't really use cash unless you can use pennies, well, we won't confront that challenge for a long time. So as you pointed out, one of the reasons I wanted to strike the last word, there are plenty of pennies in existence. There just aren't plenty of pennies in circulation. So we tend to produce lots of pennies that we don't really need to because people just keep them parked because it takes too much effort to convert them into something that's actually liquid. So this may create some demand for pennies to become in circulation. Who knows where it goes? But the idea that we need to keep producing these by the Mint, I think is a time that probably has passed. And if we find that it hasn't, we could always turn them back on. But I do think that this moment is a great opportunity to move forward with this Common Sense Act. And I'm glad to see that our colleague, Mr. Rose, is on board with this proposal and share some of the concerns about implementation. And frankly, I think Treasury is already confronting some of those challenges now, and we're, in fact, working to keep up with the administration. So as we found on a number of issues, it's hard to move at the speed of Trump, and I don't mean that to be a partisan thing. I think that our Democratic colleagues would be wise to provide their input in this process as well and support this good bill. With that, I yield back.
Gentleman yields back. Does the gentleman from Illinois seek recognition?
I do. Move to strike last word.
Gentleman's recognized for 5 minutes.
Oh, thank you. I just looked up the. When I was born, the least count for any payment was 1 cent. And the value of that 1 cent today is 12 cents. And, you know, back when I was born, the economy seemed to work pretty well. And so I think that it's fairly obvious that we got a problem here. And we have to, and other countries have done this. You know, for example, I believe the French went by a factor of 10 and maybe even 100 as they saw a much higher inflation than we've been seeing over my lifetime. But they said at some point, they just said, we're going to rename things by, you know, just shift the whole scale by a factor of 10 or more, which many countries have done. And for those of you who are worried about poor people who are saving jars full of pennies will now find themselves, you know, with a worthless jar full of pennies, the metallic value in those is greater than the transactional value of those. So if we simply drop the law that says you can no longer melt pennies down, they'll be able to capitalize on that big jar full of pennies for a lot more than the face value of its thing, so that they will actually get their monies back for their savings of pennies. But the real issue for me as a representative from Illinois is Abraham Lincoln. You know, this is something that you know, there's so few unifying characters in our nation right now, and Abraham Lincoln is one of them. You know, it's a reminder, if nothing else, of a time when the Republican Party had a strong moral core. That is hard to see these days, something that both parties will support. And so this will leave a gaping hole in the coinage of our country. There's an obvious solution to that, which is the $1 coin. This is something we've been thrashing around trying to get a $1 coin that the government, that the people can really support. I remember at some point, George Bush issued a $1 coin that was going to cycle through all of the presidents or something like this. So we've been thrashing around without success. And if we simply say, okay, Abraham Lincoln is someone we should continue to cherish, and maybe move him to the $1 coin, I'm sure the representatives of Illinois would strongly support this. I'm not sure how I'll vote on this. I support the effort, and I think we need a lot more study to make sure it goes smoothly. But this is something whose time has come, and I thank you for bringing it up. Yield back.
Gentleman yields back. Gentleman from North Carolina, Mr. Moore, you're recognized to strike the last word.
Move to strike the last word.
You're recognized for 5 minutes.
Thank you, Mr. Chairman. This is actually a bill and an idea that I've heard a lot about from folks back home. And I'll tell a couple of quick stories. I don't know how many folks go to a fast food restaurant. You can look at me and tell I probably go a little too often. But when I pay with cash, if you've done this before, sometimes you'll give the clerk or someone cash, and if you try to, let's say it's $6.51, and you give somebody sometimes $10.51, you'll see a blank stare. I think we need to improve some of the math. But I'll say I learned my math growing up working in my dad's convenience store starting in about the 3rd grade. And I actually love the penny. I think it's the foundation of, it is the foundation of our currency. And in my years of law practice, I remember times that I would have to go in on an account for an estate where I had to justify where 3 cents was. And that was a little aggravating, but I think it shows the fact that things need to be precise to the penny. I do share the concern of the bill sponsors about the cost, and I'm curious, when this bill was being discussed, or this idea, looking at less alternative ways to make the penny less expensive. Right now, the penny is composed of 97.5% zinc and 2.5% copper. Some other alternatives that are cheaper would be to use steel, which is less, and then really cheap would be aluminum. So think about aluminum, how inexpensive it is. We use it for single-use cans. Aluminum is very inexpensive. Why aren't we looking at those kinds of ideas? But I just find it bothersome, and I know that my late grandfather would have some words for me when I see him later on, when I pass away, when I see him, about why I got rid of the penny, because one of the lessons I learned as a kid was that pennies make dollars, dollars make hundreds, et cetera, and so forth. So respectfully, I will oppose the bill, but would also ask if I don't know if there's any discussion about having hearings on this or discussions about maybe other ways to save money and not eliminate this, I guess, the lowest denominator currency that we have. With that, I yield back, Mr. Chairman.
Gentleman yields back. Who seeks recognition?
Chairman, I wish to strike the last word.
Chairman of the Monetary Policy Task Force, Mr. Lucas, you're recognized to strike the last word for 5 minutes.
Thank you, Mr. Chairman. once again, it's worth noting that the language before us today addresses the thing we commonly refer to as the penny, the 1 cent piece, which now costs 4 cents to produce. And last year, the mint lost $85 million from 1 cent production. This is the 19th consecutive year the United States government has lost money keeping the 1 cent piece in circulation. The first U.S. 1 cent piece was minted in 1793 and had the equivalent buying power of 29 cents. Now remember the monetary system that was set up by the Mint Act of 1792. Every coin had to contain the metal of its issue value in it. A 1 cent piece had 1 cent worth of copper in it. A half cent had a half cent worth of copper. A silver dollar had $1 worth of silver. A $10 gold piece had $10 worth of gold. But that's not the system we work under anymore. Our economic targets, the things we tell the Fed to do, calls for 2% inflation every year. That's a 2% reduction in buying power. So over time, the value of our currency, paper and coin, continues to drop. And we have to reflect that. We have to make changes that address that. And it's not just the 1 cent piece. And by the way, the Mint says there's nothing they can use that will cost less than a cent to produce. During the Second World War, they discussed plastic 1 cent pieces. We did iron 1 cent pieces for a time. The 1 cent piece, which you see in the parking lots at Quick Stops scattered across the ground, has run its course. That original 1792 Mint Act called for half cents. They dropped those in 1857 because they weren't practical anymore, even though the buying power was dramatically greater, and it didn't wreck the economy. The 5 cent piece, as the ranking member of the full committee alluded to, now costs almost 14 cents to produce. We address that in this bill too. And you talk about recycling and saving. Think about all the billions and billions of 1 cent pieces out there. When we go from a nickel, which by the way didn't exist until 1866 because we had something called a silver half dime before that, it was a monetary saving issue at the time. We'll go to a zinc-coated planchet. And by the way, your coin collector friends don't refer to them as blanks, they're planchets. And that will make it affordable to issue those again. We'll recycle, I predict, all of these 1 cent pieces, these billions out there, to make the nickels. This is just something we have to do. And we brought ourselves to the point where when it costs dramatically more to produce a penny, a 1 cent piece, or a nickel than it's worth, this will expand across the board. Bottom line is, this bill doesn't order the Mint to do anything, but it gives it the flexibility to do what they have told us has to be done. And I'm certainly willing to discuss with the ranking member of the full committee her questions about rounding before we get to the final product. And my colleague, Congresswoman McClain, is very focused on doing the right thing. But the world has changed, and we've created a situation that's made this necessary. Let's just be practical and move forward, Mr. Chairman. And with that, there's 100 billion of them out there. You'll have plenty for nostalgia. Long after everything we know doesn't exist anymore, there'll still be 1 cent pieces floating around, just as there are Roman and Greek coins from 2,000 years still in existence. It's our mark on history. And by the way, I've always been an advocate of a higher and a focused degree on artistry in our coinage because of the legacy it leaves. After that sermonette, Mr. Chairman, I yield back.
I didn't want it to stop. I thank Mr. Lucas. Mr. Lucas yields back. Does anyone else seek recognition on this measure? Hearing none, we'll move to amendments. Does anyone wish to offer an amendment to this bill? Ranking Member Waters.
I have an amendment at the desk.
We'll pause for the amendment to be distributed.
Mr. Chairman and members, I
Just a
was
report order,
hoping
Mr. Chairman.
Just a moment. We'll wait for it to be distributed.
I reserve a point of order, Mr.
And
Chairman.
Mr. Lucas has reserved a point of order. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3074, offered by Ms. Waters of California, designated as H.R. 307402.
Without objection, the amendment is considered read, and the gentlewoman from California, Mrs. Waters, is recognized for 5 minutes to describe her amendment.
Thank you so very much, Mr. Chairman. I was hoping that Congresswoman McClain would be here. I see that she's left. I certainly wanted her to hear the discussion that was going to take place about the penny. I'm deeply concerned that eliminating the penny would also fuel the already high cost of goods that Americans face. This is especially true given that many Americans still will soon experience more hardship from sweeping cuts to programs like Medicaid, SNAP, and more. Through this bill, we would literally nickel and dime low-income communities who do not see pennies as real money and real value. Before eliminating the penny, I believe that local communities should have a seat at the table. My amendment would delay the end of the penny until after a task force made up of local and state entities have evaluated the effects of stopping penny production. In particular, the task force will consider the impact on low-income communities and debanked and underbanked groups and how potential rounding guidance should be implemented. The task force would then provide a recommendation to the Treasury on whether the agency should cease production of pennies for circulation. Under my amendment, if the Treasury then determines it is in the public interest to cease penny production, it will issue a report to Congress and end production of the new pennies. It is critical to take into consideration the views of communities that will be dealing with the day-to-day reality of these changes. My amendment would ensure we consider their views before moving forward. I would ask my colleagues, just consider going around the country, engaging in communities, giving them a place at the table to talk about the penny. Now, we sit here as members of Congress, and many of these members, when they make purchases, they can say, keep the change. They don't need the pennies. But I want you to know, I don't want us to be seen as so elitist that we don't care about what other people, perhaps poor people, think about the penny. Why not engage the country? Why not have communities on a task force that would set up all of these engagements and have people in all these communities talking about the penny? I think that instead of looking as if we're so elitist that we just want to get rid of the penny, that our constituents would appreciate the opportunity to give their views about the penny. And so I indicated when I first spoke about the penny that yes, I'm a big supporter of the penny. And I told my staff a little story about what I heard about someone who saw someone just literally throwing pennies aside and saying, is that person rich? They can get rid of money? And so it really made me think that is real money. And I'd like us to think about it in that fashion. And I would like us to think about, wouldn't this be a wonderful way to engage everyone in this country, in these communities, to talk about the penny and what they think about it? I think they would respect us for not simply allowing Treasury, because the president came up with another idea to just eliminate the penny. I yield back the balance of my time.
Gentlewoman yields back. Who seeks recognition?
Mr.
Gentleman.
Chairman, move strike last word.
Okay, I'll do Loudermilk next. No, it's fine. Mr. Lucas, you're recognized. You're up.
Thank you, Mr. Chairman. I'd first say to my friend and colleague, the ranking member, I think we should discuss her concepts as we work through the legislative process. But I would also note that nothing in the bill ends the legal tender status of the 1 cent piece. And remember, the currency value of a coin or a paper note is because Congress by statute gives it legal tender status. It has value. The 1 cent piece will continue to have value. Matter of fact, unlike many countries in the world, the United States is unique in that all currency and coins, virtually all, issued since the founding of the country are still legal tender. If you have a 1 cent piece from 1793, it is still legal tender. If you have a $1 bill from 1863, it is still legal tender. Most countries cancel all of their currencies every so many years. So we are unique in that regard, and that continues. So anyone with a jar full of pennies still has value. They can still use those. The question about manufacturing the penny. The President has directed the Treasury and the Mint to no longer purchase blanchetts, the blanks, to make pennies. So when the existing stock is done at the mints, they're not going to make any more. So the question is not continuing the present issue. That's been decided by the administration. The real question is, where do we go forward and in the long term? And I think that is still the underlying principle of this bill. Again, I'm enthusiastic about listening and discussing with the ranking member her ideas, but I must respectfully oppose her language when I have an opportunity to vote in a little bit and yield back.
Gentleman yields back. The gentleman from Texas is recognized to strike the last word.
Thank you, Mr. Chairman. I rise to support the ranking member's amendment to ensure that the elimination of the penny does not disproportionately impact communities that rely on cash for everyday transactions. Back home in Texas, many families still rely on cash to buy groceries, to get gas, and pay rent. And that means sometimes pennies make the difference between getting a hot meal or going without food for the day. The amendment takes into consideration the impact that eliminating the penny would have on older Americans and unbanked groups who use cash more than the average American. So in my district, cash is king. We know that every penny counts. If you're paying in cash every day and prices get rounded up or down over a month, that really means something to them because every penny counts, and that's money coming out of people's pocketbooks. And it's money that low-income families use for everyday things. Families, seniors, and folks on fixed incomes simply can't afford to lose this penny. And as I mentioned earlier, what is the stock market going to do? Stop selling penny stocks and make them nickel stocks? What are we going to do? Require shoemakers to stop making penny loafers and make them into nickel loafers? Well, songwriters have to start singing nickels from heaven. I could go on, but the bottom line is that this hurts people the most that are at the bottom of the bracket in our country. We need to make sure that there's no negative impact on them and their pocketbooks. While the penny might seem like a collector's item to most Americans, it still makes a difference in communities like mine and the ranking members too. That is why I urge the adoption of the ranking member's amendment.
Will the gentlewoman yield?
I yield the balance of my time.
Thank you so very much for your statement, your concerns that you have addressed about the penny. I was sitting here thinking about the fact that we seem to pay attention more to what the rich care about than what the average person or poor people think. When I sit here and I think about what has happened with cryptocurrency and how, the President of the United States and his family are going to make billions of dollars, and how the insiders, the market makers, and others are going to make billions of dollars, it just seems that we ought to care more about what the poor people or working people think about money. They know that they'll never, perhaps, have the opportunity to have access to the kind of riches that we support here, over and over again. I think the perception is such that we care more about what rich people think than we do about what the average person thinks. And so the penny is worth having a national discussion about. It is worth us paying attention so that we don't seem so elitist that somehow the penny is not important. And so for all of the reasons that I have given earlier about the rounding and all of that, I'm also concerned about how we are viewed and the perception that somehow the penny is not important and that we're too elitist to want to give real thought to how we maintain that penny. I know some people won't agree with this argument, but that's mine. And so I give it, and I yield back to the gentlelady from Texas.
Turn your mic on, please.
I'm sorry, you know, I think the penny is as American as the flag, as baseball and apple pie. I mean, you get rid of the penny, and you're just kind of piercing the heart of the Statue of Liberty. People really, really like pennies, and again, it could be the songs of like pennies from heaven. It could be the sayings, a penny for your thoughts. I mean, people have penny in their everyday language. They use it, they talk it. We should not be taking something away from Americans that they love so much. With that, I yield back.
Gentlewoman yields back. Does the gentleman from Oklahoma insist on his point of order? I failed to clear that.
I would seek to withdraw my point of order, and by the way, Mr. Chairman, ask you a unanimous request to enter a letter of support for the Common Sense Act from the United Steelworkers.
Without objection, that'll be included as a part of our record. Thank you. Who seeks recognition? The gentleman from Georgia? Oh, sorry, Mr. May you alternate. I didn't see Mr. Sherman. I apologize. Mr. Sherman, you're recognized to strike the last word.
Thank you. I headed the largest sales tax agency in this country for several years. And in fact, almost every transaction is already being rounded. If you buy something for $4.12, in our state it was 7% sales tax, you actually owe the merchant $4.4084, and they round it to the nearest penny. And now, rounding to the nearest nickel can be done the same way. In addition, if you are hell-bent on making sure that everything is rounded down rather than rounded up, if you're going to buy, it is the customer who decides whether to go to the checkout stand and buy one box of paper clips, knowing that that might be rounded down, or 2 boxes. So if you're planning to buy 2 boxes, you can buy them separately or together. And so it's the customer who can determine whether whether the transaction would be one that would be rounded up to the nearest nickel or down to the nearest nickel. Keep in mind this bill, and so I can't agree that we need 3 years of study. We've studied this for a long time, but under this bill, the pennies remain in circulation for many years to come. And so I think that it would be a very slow process. And look, if we determine that we want to reissue the penny, we can do that at any time. From an environmental standpoint, there is a lot that goes on in mining zinc and mining nickel. If this program goes through, we will be mining less. Now, it'll probably be less mining of nickel because we'll use the zinc along with nickel to make a nickel. But whether it is nickel or whether it, having many, many tons of metal created for the purpose of having a penny and I do think there will be an adjustment. I think the word penny will continue to be a part of our vocabulary, and a penny will still be involved in all of our non-cash transactions. But having grown up in a society where every transaction at the checkout counter was already subject to rounding, and keep in mind the amount of rounding. 70, 80 years ago, you rounded to the nearest penny. Rounding to the nearest nickel is less rounding because the penny 80 years ago is worth more than the nickel today. So I think it's time to move forward on this. We dealt with this in this committee room, I think it was 15, 20 years ago. And I think that it is time. I think that Abraham Lincoln will continue to be remembered on the $5 bill, and that people will adjust. With that, I see no one who wants me to yield them time. And yes, Mr. Foster.
Yeah, if I could just make one quick point about rounding. Let's say you have an entry-level job, 18 bucks an hour at that's sort of a warehouse job in the Chicago metro area. You're being paid 1 penny every 2 seconds. So if you're worried about poor people being treated unfairly, let's worry about wage theft for warehouse workers. That's a bigger issue than rounding. And I think we really ought to focus on things that are really, really important. And I'm not sure that the rounding part of this really has a big impact on poor people.
It is a joy to hear someone on this side of the issue from the state of Illinois. Back decades ago, the concern was remembering Abraham Lincoln.
Oh, you missed my earlier point. I did not let that slide.
Oh, okay. Then I'm confident that Abraham Lincoln will be appropriately remembered in many, many different ways.
Will the gentleman yield?
I will yield to the ranking member.
To Mr. Foster, there is no more warehouse workers. The robots are doing the job. Yield back.
I'll yield back to the chair.
I thank the dialogue. The gentleman yields back. Now recognize the gentleman from Georgia, Mr. Loudermilk. You're recognized to strike the last word.
Well, thank you, Mr. Chairman. I'm a good friend and resident bullfighter from Oklahoma. Addressed basically every point that I thought we needed to make, but I will say this: as we make this common sense adjustment to modernize our monetary system, maybe we could talk to our friends over in ENC about doing something about this 9/10 of 1 cent tax on fuel. So I yield back. Yes, I'll yield to the gentleman from Oklahoma.
Thank you, sir. I would just simply note once again, this is an inevitable outcome of policies that we are looking at on monetary task force. The 2% inflation target by the Federal Reserve System means that we will lose 2% of our buying power every year. You don't have to be much of an economist to calculate the compounding effect at what point when the zinc core coins won't be producible, or the copper-clad coins that we do for dimes, nickels, quarters, and halves. This is a designed problem that has come to rest upon us. We're just trying to fix the policies that all my Keynesian friends here support. Go back to the
Would the
gentleman.
gentleman yield?
Yes, sir.
Is the gentleman want to go back to the gold standard? If he does, I'm always interested in engaging on that conversation.
I've sat for a number of years next to Dr. Ron Paul, who was a very strong proponent of the gold standard, and we've discussed this in nuances beyond what you would believe. But I say this, Mr. Chairman, there is an example of de-inflating the economy after the American Civil War, as you're well aware of, when we reduced the currency in circulation, lowered the price of gold, and went back to gold standard. I'm not sure the American public is ready for that kind of an experience in your lifetime or mine again.
Well, I raise it with my friend from Oklahoma because I think he illustrates the critical nature of why price stability should be the principal objective of the Federal Reserve System. No matter how many mandates they have, their real role in our society to protect the poor and the productive sector of the economy is to have a price stability that doesn't have a depreciating currency. I thank the gentleman, and
You were a statesman and
I yield
scholar,
back to
Mr.
him.
Chairman. Yield back.
Is there further debate on Mrs. Waters' amendment? If there's no further debate, the question now occurs on the amendment. All those in favor of the amendment, please say aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the nays have it. The nays have it. The amendment is not adopted. We'll now move to the next amendment. Is there an additional amendment? The gentlewoman has requested a recorded vote. All those in favor of recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is so ordered. Pursuant to subsection C5 of Rule 3, the committee rules further proceedings on the amendment are postponed. We'll now move to the next amendment. Is there another amendment to Ms. McLean's underlying bill? Seeing no further amendments, without objection, the previous question on the substitute is ordered, and recorded votes on the pending amendment have been postponed. Once those votes are taken, the committee will immediately vote on the adoption amendment in the nature of a substitute and then consider the question to report the measure. We'll now move to the next bill. Pursuant to notice, I call up H.R. 4478, the Tailored Regulatory Updates for Supervisory Testing, or Trust Act of 2025. The bill was introduced by Representative Moore of North Carolina. The clerk will report the bill, which was distributed in advance.
H.R. 4478, to amend the Federal Deposit Insurance Act to permit federal banking agencies to examine qualifying insured depository institutions with under $6 billion in total assets, not less than once during each 18-month period and for other purposes.
Without objection, the bill is considered read, and it's open to amendment at any point. I now call on the distinguished gentleman from North Carolina. Mr. Moore, you're recognized to explain your bill for 5 minutes.
Thank you, Mr. Chairman. In my home state of North Carolina, particularly in the rural communities in the western part of the state, community banks are lifelines, and they do accept pennies for deposit as well, Mr. Chairman. But under the current regulatory framework, too many of these institutions are spending more time navigating examiner checklists than serving their customers. This overly burdensome environment discourages growth and leaves communities with fewer banking options. The Tailored Regulatory Updates for Supervising Testing Act, or the Trust Act of 2025, will bring much-needed regulatory balance back to our financial system and strengthen community banking. The Trust Act raises the consolidated asset threshold from $3 billion to $6 billion for well-managed, insured depository institutions to qualify for an 18-month examination cycle. This is a common-sense, bipartisan update to a rule that has not kept pace with the changing financial landscape. These institutions do not pose a systemic risk, and the Trust Act does not weaken any safety or soundness standards. This is important to point out. This applies only to small, community-focused institutions, those with no recent change in control, no outstanding enforcement actions, and strong examination ratings. They are well-capitalized banks with a track record of doing things right. These community banks are essential for small business lending and economic development in communities across this country. Back in 2018, Congress recognized this reality and passed the bipartisan reforms to promote smarter, more tailored regulation. The Trust Act builds on that effort by updating the asset threshold to ensure the same percentage of well-performing community banks that qualify for longer examination cycles. I want to thank my colleague, Congressman Torres, for co-leading this effort with me, and Chairman Hill and Subcommittee Chair Barr for their work. Mr. Chairman, let's stand with the institutions that know their customers by name and invest in our communities. Thank you, and I yield back.
Gentleman yields back. Who seeks recognition? Gentlewoman from California.
I move to strike the last word.
You're recognized for 5 minutes.
I want to thank Representative Moore and Representative Torres for their work on this bipartisan bill to provide further exam relief for our community banks. This bill raises the asset threshold from $3 billion to $6 billion for well-capitalized and well-managed banks to qualify for an 18-month examination cycle instead of a 12-month exam. Like the SMART Act, this incentivizes community banks to manage their businesses well. And if they do, then they're able to get less frequent exams. Congress last raised the threshold to $3 billion in 2018, which covered 94.2% of banks. By raising the threshold to $6 billion today, we will update this threshold to cover roughly the same number of banks, 94.6% of banks that have less than $6 billion in assets. Again, while Republicans have pressed for much higher thresholds, as high as 25 billion. This 6 billion threshold is more reasonable approach. I urge the members to support this bill, and I yield back the balance of my time.
Thank the ranking member. She yields back. Mr. Loudermilk, you're recognized to strike the last word.
Thank you, Mr. Chairman. I support the Trust Act, a bill that reflects a thoughtful approach to modernizing how regulators supervise community banks. This legislation addresses a long overdue update to the Federal Deposit Insurance Act by increasing the asset threshold for extended examination cycles from $3 billion to $6 billion. It is a targeted technical correction that acknowledges how significantly the community banking landscape has changed over the past decade. Since the threshold was last set, inflation has risen, the number of smaller banks has declined, and the average size of healthy institutions has grown. Yet the rules have not kept pace. Today, many well-run institutions are being examined more frequently than necessary, not because of risk, but because of an outdated regulatory threshold that diverts time and resources away from lending and customer service. Importantly, the Trust Act preserves all the existing safeguards. Only institutions that are well-capitalized, well-managed, and free from enforcement actions will qualify for the extended 18-month exam cycle. Regulators also retain full authority to conduct more frequent exams if conditions warranted. The Trust Act does not lower standards. Instead, it reflects a regulatory approach that is responsive to a bank's condition and recognizes the difference between genuine supervisory concerns and institutions that are simply growing responsibly. This is a smart, common-sense adjustment that will help community banks stay focused on what they do best, serving the real economy. I thank Representative Moore and Torres for their leadership, and I urge my colleagues to support this bill, and I yield back.
Gentleman from Georgia yields back. Who seeks recognition? Seeing no other speakers, I recognize myself for 5 minutes in support of Mr. Moore's bill. I'm proud to support the Trust Act offered by the gentleman from New York and the gentleman from North Carolina. This is common sense legislation that updates a now outdated threshold in the Federal Deposit Insurance Act, increasing the asset threshold from $3 billion to $6 billion for insured depository institutions that qualify. I think Ranking Member Waters described it quite effectively. This, too, was such a heart of the business I was in before I was in Congress, and I can't tell you how much this will be appreciated by boards of directors, management teams of well-managed, highly rated community banks. This is just really a major contribution to managing their affairs and lowering their annual planning costs. It's a simple, targeted fix that reflects the evolution of our financial system and the modern risk landscape facing our community banks. To be clear, this bill does not lower supervisory standards. I think that bears repeating or reduce regulatory scrutiny. It simply provides tailored supervisory relief for community banks that are doing the right thing. Bottom line, we're incentivizing actually good behavior. With that, I support Mr. Moore's fine work and his co-sponsor, Mr. Torres. I urge a yes vote on both sides of the aisle, and I yield back. Does anyone else seek recognition on the Moore bill? Hearing none, we'll turn to amendments. Does anybody have an amendment to Mr. Moore's bill? I see there's no additional amendments, no further discussion, so the question now occurs on ordering this bill to be reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Aye. Those opposed signify by saying nay. Opinion of the chair, the ayes have it.
Mr. Chairman,
The gentleman is recognized.
I request a recorded vote.
The gentleman requests a recorded vote. All those in favor of recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3, the committee rules, this vote is postponed. We'll now move to the next bill. Pursuant to notice, I call up H.R. 3446, the FDIC Board Accountability Act, which was introduced by the committee's Vice Chairman, Representative Heisinger. The clerk will report the bill, which was distributed in advance.
H.R. 3446, to amend the Federal Deposit Insurance Act to revise the membership requirements for the Board of Directors of the Federal Deposit Insurance Corporation and for other purposes.
Without objection, the bill is considered read and open to amendment at any point. I now call on our Vice Chairman, the gentleman from Michigan. You're recognized for 5 minutes to describe your amendment.
Thank you, Mr. Chairman. I appreciate that. And in the fall of 2021, the director of the CFPB, using his position as a board member of the Federal Deposit Insurance Corporation, FDIC, upended an agency with over 88 years of collaboration and independence as its history. As a result of then Director Chopra's hostile takeover, the FDIC's core mission, which is to protect depositors, suddenly felt like an afterthought. Fast forward to November of 2023, the Wall Street Journal reported allegations of a, quote, toxic workplace culture, which then included harassment and discrimination from the FDIC's own leadership. Subsequent year-long investigation by this committee concluded that the agency fostered a toxic culture that employees endured and suffered under for years. Information obtained through testimony, document requests, staff interviews showed the consequences of former Chairman Grunberg's leadership at the agency for 20 years. Mr. Chairman, the FDIC was established in 1933 and served the American banking system very well. However, given the actions during the last administration, I believe that reforms are needed. The FDIC Board Accountability Act would address many of the problems that we have previously outlined. And first, the FDIC board members should not serve in perpetuity. This shouldn't be a lifelong Supreme Court-like appointment. We need to have some terms to that. Fresh ideas and leadership are critical to keeping up with the rapid expanding and modernizing American banking system. My bill will limit board service to no more than 2 terms and a maximum of 12 years in total, reducing the potential for entrenched partisanship. Second, the bill would move the director of the CFPB from a voting to a non-voting member. This change would allow the director to participate in board meetings, provide valuable input concerning consumer protection, yet not dominate and run the board. So I want to note, while testifying before this committee, Director Chopra was quick to remind just about anyone listening that he was, in fact, not a regulator. I feel it is appropriate to move that position, if you're not a regulator, to an observer status. In addition, this change is not without precedent. Similarly, the Financial Stability Oversight Council, FSOC, has 5 non-voting members, all representing government or industry perspective. And lastly, the FDIC Board Accountability Act would require that of the 4 board members appointed by the President and confirmed by the U.S. Senate, one shall have state bank supervisory experience, and one shall have demonstrated primary experience working in or with depository institutions having less than $10 billion in assets. Mr. Chairman, we know that this discussion that happens, and you with your background, know that sometimes those smaller community banks can kind of get lost in the wash, and we need to make sure that they have a voice at that table. So I believe that these changes are common sense, and as community financial institutions continue to bear the burden of overreaching regulations, it's important that they have a voice represented on the board. So, Mr. Chairman, I look forward to advancing this legislation. I want to thank Chairman Barr for his continued support of my bill and yield back the balance of my time.
The gentleman yields back. Who seeks recognition? Ranking member of the full committee, Ms. Waters, you're recognized.
I move to strike the last
You're
word.
recognized for 5 minutes.
Unlike many of the bipartisan bills we are considering this week, this bill is a partisan attack against the Consumer Financial Protection Bureau and an attempt to relitigate past fights at the Federal Deposit Insurance Corporation. It also does nothing to help community banks or consumers, but is instead offered to distract the public from the fact that Trump is gutting the CFPB and half of financial regulations protecting our financial system. Instead, House Republicans are claiming that previous Democratic members of the FDIC board, including the CFPB director, exceeded their authority by seeking to advance a proposal to request public comment on how the FDIC could strengthen their bank merger review policies over then Republican Chairwoman McWilliams' objections. I wrote a letter to Chair McWilliams raising strong concerns about her effort to block the majority of the FDIC board from acting and ask her what legal authority allowed her to do this. Chair McWilliams decided to resign shortly thereafter, and the Department of Justice analyzed what happened and wrote a legal opinion making clear that the Democratic members acted appropriately and that an FDIC chair lacks authority to block a proposal supported by the majority of the FDIC board. That's because there were 3 Democrats on the board and only 1 Republican. Mr. Chairman, that's called a majority. Nevertheless, House Republicans introduced this bill to, quote, ensure the FDIC remains an independent agency removed from the political whims of partisan ideologues like we saw on December 9th, quote, unquote. So how do Republicans accomplish this? By removing the only voting person on the FDIC board that is a consumer financial protection expert, the CFPB director. It is laughable that the supporters of this bill claim they want to strengthen FDIC independence or that this bill would do anything of this sort. President Trump has already undermined the independence of federal agencies by firing independent board directors and forcing all banking regulator rules to be approved by the White House. The Trump White House is even now approving the budget of the FDIC, deciding how many resources they can use on regulatory staff, bank examiners, or enforcement attorneys. Have the Republicans raised any objections to this? No, of course not. Trump and his allies have also attacked the Fed repeatedly, threatening to fire Jay Powell for no good reason whatsoever, except that Trump needs lower interest rates to fix the problem he created with a chaotic tariff plan that no one wants. This bill does nothing to reverse those reckless actions by Trump or otherwise strengthen the actual independence of agencies like the FDIC. I urge members to oppose this partisan bill. This is outrageous, and I yield back the balance of my time.
Ranking member yields back. Good gentleman from Georgia, you're recognized. Strike the last word.
Well, thank you, Mr. Chairman. I support H.R. 3446, the FDIC Board Accountability Act offered by my good friend, Mr. Huizenga. Ensuring the FDIC is well-functioning and free from undue political pressures is critical to maintaining a safe financial system and protecting depositors. Unfortunately, we've heard troubling testimony about dysfunction at the highest levels of the FDIC, including partisan infighting and senseless power grabs. This is unacceptable and undermines the trust of this critical agency. Accountability and transparency should be the foundation for every financial regulator. This bill requires one member of the board to demonstrate primary experience working in or supervising depository institutions having less than $10 billion in total assets. This bill does not micromanage the FDIC, but affirms that board governance should be a collaborative and not dominated by one political appointee. Meaningful term limits on the number of terms a board member may be appointed will decrease political pressures on the agency and will lead to better outcomes for financial institutions and their depositors. When it comes to making decisions that affect the safety and soundness of our banking system and the savings of millions of Americans, we should expect open communication and collaboration. This bill also ensures that FDIC board members are well suited to address the pressing needs of the agency. That includes shifting the director of the CFPB to a non-voting observer. The CFPB director should be squarely focused on enforcing federal consumer protection laws, not weighing in on prudential regulation, supervisory matters, or deliberations on deposit insurance. This is a meaningful and targeted bill that places guardrails on the FDIC's leadership structure. An independent agency tasked with guarding our nation's depositors should remain just that, independent. I urge all of my colleagues to support this bill, and I yield back.
Will the gentleman yield?
I yield to my friend from.
Thank you. I appreciate your leadership on this. And just to remind everybody what was going on, this story at the FDIC broke in the Wall Street Journal. It caused a couple of investigations. Those investigation findings and the investigation itself were bipartisan. They were open to everybody. And we had a number of transcribed interviews that clearly demonstrated the reign of terror that Marty Gruenberg had at the FDIC was real. People literally were scared to speak out. And we started getting whistleblowers coming to us before there was even a whistleblower avenue for them to come, that was formally set up. And I think sort of time has maybe turned some people's memories a little hazy on the details of what was happening over there. It was abhorrent the way that had been run, and screaming at employees, harassing employees, intimidating employees, and creating a culture that was allowed to then affect others. And it was just a horrible, horrible situation. We are trying to make sure that never happens again. And it shouldn't matter whether there's an R or a D attached behind anybody's name that's leading that organization. It simply is how you treat people that should count, and that is not the way that those government employees at the FDIC should have been treated. So I just wanted to reemphasize again that that both sides of the aisle were in on those transcribed interviews, that investigation that was happening, that was open and accessible to everyone on this committee. And Mr. Chairman, we think that this is a logical step. So I yield back to the gentleman from Georgia.
I yield back the balance of my time.
Gentleman from Georgia yields back. The gentlewoman from Texas is seeking recognition.
Thank you, Mr. Chairman, and I rise to oppose this bill. While I'm very aware of the situation.
You're recognized to strike the last words.
Yes, sir, I moved to strike the last word. I apologize. I'm aware of the situation at FDIC, but I don't think this bill is the answer. I think this bill is more of targeting the Consumer Financial Protection Bureau and having a director being on there and the term limits and other things that he's talking about. In fact, when he started describing the lack of respect to employees and the harassment, et cetera, I thought he was talking about Mr. Musk and the Deutschkatz team, because that's exactly some of the reports we got from a lot of employee groups. So I would hope that as adamantly as he's focused on the FDIC employees, that he focuses on that for all employees, including our own employees here at our cafeteria and our dining room, who are being moved and losing their jobs. But enough said about that. I think it's important that also to note that this bill does nothing to ensure the FDIC remains independent. I strongly am opposed to this bill, and with that, I yield to the ranking member the balance of my time.
Thank you very much. Mr. Chairman, I would like to ask you a brief question. This week, we mark the 15th anniversary of Dodd-Frank, but our committee has failed to hold one of its required hearings this year. I wrote you in February asking when we would have our statutorily required hearing with the CFPB acting director. We've had required hearings with the Fed Chair twice this year and the Treasury Secretary once. Last Congress, former Chair McHenry and the CFPB director testified 3 times, but it's been more than a year since we had our semi-annual CFPB hearing. Even former acting director Mick Mulvaney testified 5 months into his tenure. Since you have not scheduled the hearing yet, here is another letter from me requesting you to do so. Consumers deserve to know what is going on at the CFPB. So when will you schedule this overdue hearing? Can we finally have this hearing in September? With that, I respectfully give to you the letter.
I thank the gentlewoman for the personal occurring of a letter. Thank you for that. That's not to implicate either you or I about the inter-office mail or the U.S. Postal Service. I thank you for the letter. It's been my preference from the very beginning of this Congress that we have President Trump's nominee confirmed by the Senate to testify before this body on the Trump administration's plans for the Bureau. And unfortunately, as the ranking member certainly knows, the person nominated to take that job withdrew their name and it subsequently has now been appointed to a position in the United States Treasury Department. So we can continue to wait for the Trump administration to appoint and the Senate to confirm a new bureau head, but I take her request seriously and will follow up with her, and I thank her for the time.
Thank you very much, Mr. Chairman.
Ms. Garcia, it's still your time.
I reclaim my time, but will yield it back. Thank you.
The gentlewoman yields back. Does someone else seek recognition to speak on this bill? Seeing none, I recognize myself for 5 minutes. Well, let me thank my good friend, our committee vice chair, Mr. Heisinger, for introducing this bill. Also want to thank him for the due diligence and careful scrutiny he used in thinking through the parameters of this bill. This is not just a legislative measure that has come up in any casual way. He served as our chair of the Oversight Committee in the last Congress and was quite diligently in looking at the absolute terrible situation that we found in the abuse and mismanagement at the FDIC under the Biden-Harris administration. A well-functioning FDIC is critical to maintaining the safety and soundness of the U.S. banking system. Many people come to this committee. We have a lot of conversations about the importance of the Federal Reserve, and it is important, particularly as it relates to monetary policy and particularly as it relates to price stability. But when it comes to our banking system across the country, and particularly for our small banks, our 4,500 banks that are under $10 billion, there's not a more important agency than the FDIC. So I think the Vice Chairman's bill is about good governance. It's not about in any way attacking or dealing with the Consumer Financial Protection Bureau. FDIC's supervisory functions should be creating certainty and stability for depositors, particularly in times of stress. But it's hard to fulfill that mission when internal strife paralyzes the agency, and that's what then Chairman Heisinger of our Oversight Committee found to be the case. And this committee took full committee witness testimony to that effect. And when governance is concentrated in the hands of partisan actors who lack expertise or in some cases, basic decency, you have a breakdown in the oversight of the agency. Recent disturbing events involving board dysfunction damage the agency's reputation and integrity, and I would remind this committee of the testimony we've taken on a full committee basis in the last Congress on the workplace violations and abuse uncovered from whistleblowers in the agencies about the incompetence of the previous agency head, even to the point where the Biden administration basically said he would be replaced. And finally, what about the substantive lack of leadership and incompetence in the Silicon Valley challenging weeks? The former head of the agency demonstrated, again, a lack of capability in that instance as well, in my personal view. H.R. 3466 is a targeted approach to implement the necessary reforms in the FDIC structure. This bill will increase accountability by requiring expertise among board members and setting a balanced term limits to ensure all board members are informed and have equal opportunity to the decision-making process. It will also ensure that the CFPB remains focused on issues that it's actually equipped to address, protecting consumers and not dealing in, as both Mr. Loudermilk and Mr. Heisinger pointed out, bank safety and soundness or deposit insurance or merger and acquisition matters, which is the core function of the agency. And again, the reason why I assert that I don't find the CFPB comments from the minority particularly compelling is 90% of the FDIC-insured banks are under $10 billion, and therefore the CFPB actually isn't supposed to be examining them or particularly involved in their lives, and the FDIC, the Office of the Comptroller of the Currency, the Federal Reserve, the Credit Union Association are all involved in consumer protection, all involved in consumer compliance. They're all doing it. We did not get one agency through Dodd-Frank. We got a new agency on top of all the other agencies doing this exact supervisory work. So I think the gentleman's idea of having them be a non-voting director is good for coordination of consumer protection-related matters. I urge all my colleagues to support his bill and restore public confidence in the FDIC, charged with safeguarding our financial system, and I yield back. Does anyone else seek recognition on this bill? Hearing none, we'll move to amendments. Does anyone have an amendment on Mr. Heisinger's bill? There being no further discussion or amendments to the bill, the question now occurs on ordering the bill to be reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the ayes have it. For what purpose does the gentleman from Michigan seek recognition?
I request a recorded vote.
Gentleman requests a recorded vote. Those in favor of recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is so ordered. Pursuant to subsection C5 of Rule 3, the committee rules, the vote on this question is postponed. We'll now move to the next measure. Pursuant to notice, I call up H.R. 3390, the Bringing the Discount Window into the 21st Century Act. This bill was introduced by Representative De La Cruz. The clerk will report the bill, which was distributed in advance.
H.R. 3390, to amend the Federal Reserve Act to require the Board of Governors of the Federal Reserve System to carry out a review of discount window operations and to implement improvements to such operations and for other purposes.
Without objection, the bill is considered read, open to amendment at any point. Representative De La Cruz has an amendment in the nature of a substitute, copies of which have been distributed in advance. The clerk will now report that amendment.
An amendment in the nature of a substitute to H.R. 3390, offered by Ms. De La Cruz of Texas, designated as De La Cruz 037.
Without objection, the amendment is considered read and will serve as the base text for purposes of amendment. The gentlewoman from Texas, Ms. De La Cruz, is now recognized for 5 minutes to explain her amendment.
Thank you, Mr. Chair. I'd like to thank you for including my bill, bringing the discount window into the 21st Century Act in today's markup. I would also like to thank Task Force Chair Lucas and Subcommittee Chair Muser for co-sponsoring this legislation. My bill is simple and clear-cut. It would require the Federal Reserve to conduct a comprehensive review of its discount window operations. The discount window is a key source of liquidity that banks rely on in times of stress. This bill has several common sense provisions, like evaluating discount window hours of operation, reviewing how the Federal Reserve banks communicate about the discount window with their memberships, and taking a look at the current state of the technological infrastructure that supports this key program to ensure that it is running smoothly. All common sense. Importantly, the bill also directs the Federal Reserve to examine the interaction between the discount window and critical lending provided by the federal home loan banks, which community banks depend on to support loans for homeowners, small businesses, and farmers. Preventing issues with discount window lending during times of crisis or economic stress, when such access is most critical, will enhance financial stability and help ensure credit remains available to our constituents. This committee, on both sides of the aisle, knows the importance of the Fed's discount window. The review mandated by this bill will help ensure the Fed is ready for the future and that the discount window is too. I urge my colleagues to support this bill. I yield back.
Gentleman yields back. Who seeks recognition on Ms. De La Cruz? Mr. Foster?
Yeah, well, thank you. I guess I
Strike the last word.
strike the last word. Yeah, I want to thank my Republican colleagues for bringing forth a clear and focused version of this bill as a standalone measure. I also want to thank the chairman for advancing our second bill this year to respond to the Silicon Valley Bank and the other regional bank failures 2 years ago. As the chairman's aware, Democrats have numerous bills with bipartisan support that would further address problems associated with the failure of Silicon Valley Bank, many of which hurt community banks through no fault of their own. So we support this bill, and I encourage the chairman to continue to expand his bipartisan efforts in this area. And I yield back.
Appreciate the gentleman from Illinois. Mr. Loudermilk, you're recognized to strike the last word.
Thank you, Mr. Chairman. I support H.R. 3390, bringing the discount window into the 21st Century Act, and I want to thank my good friend, Ms. Dela Cruz, for her leadership on this legislation. The Fed's role as a lender of last resort is of critical importance to the safety and soundness of the financial system. However, it needs improvements and updates to better respond to the potential speed of today's financial panics. Last Congress, the Financial Institutions Subcommittee held the most bipartisan hearing we've ever had when we examined the Federal Reserve's role as the lender of last resort. In that hearing, members on both sides of the aisle raised concerns with the inefficiency and lack of transparency around the discount window operations. For decades, the Fed's emergency lending authority has evolved in response to new threats to financial stability. Following the March 2023 bank failures, the Fed has been working to re-examine its discount window operations, given the clunky process that event made evident. H.R. 3390 will direct the Fed to conduct a comprehensive review of its discount window lending programs, including a consideration of the effectiveness of our discount window in providing liquidity to the financial institutions in times of financial stress. It will also require consideration of whether the technological infrastructure is sufficient to support the timely provision of liquidity. There are a number of simple improvements the Fed can implement to reach this goal, and we will continue to encourage the Fed to make such changes. I encourage all members of the committee to support this bipartisan legislation on a topic of critical importance, and I yield back.
Gentleman yields back. Is there further debate on Ms. Dela Cruz's bill? Hearing none, we'll turn to amendments. Have we got amendments on Ms. Dela Cruz's bill?
Yeah.
Dr. Foster has an amendment at the desk. We'll pause for it to be distributed.
Mr. Chair, can I reserve a point of order?
The gentleman from Michigan reserves a point of order on the Foster amendment. Yeah, okay. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3390, offered by Mr. Foster of Illinois, designated as Foster 044.
Thank you very much. Without objection, the amendment will be considered as read, and the gentleman is now recognized for 5 minutes to discuss his amendment.
Thank you, Mr. Chairman. I think this is a relevant and important bill, and I'm glad that we're considering it as a standalone bill here today. In the last Congress, similar language was offered as part of a broader package that cumulatively I could not support. But during the markup of that package, I offered an amendment similar to this one and offered to work together on this proposal. I've appreciated your willingness to work on this bill, and I believe that this is a friendly amendment that's in line with the spirit of the bill. This amendment makes several technical adjustments that are intended to encourage collaboration in the review by relevant banking regulators and others to ensure proper oversight of the process. The bill also makes adjustments to the parameters of the review to capture other areas of the discount window's operation that were identified as problematic during the recent banking turmoil in 2023, when record numbers of financial institutions borrowed from the discount window at record rates. First, this amendment requires the Federal Reserve to review the effectiveness of communications between the Federal Reserve banks, financial institutions, the Board of Governors, FDIC and OCC, and the Treasury Department, ensuring regulators are able to rapidly communicate regarding the functionality of the discount window. Secondly, it will require a review of different financial institutions' access to the discount window, ensuring that access is consistent across the entire Federal Reserve System. Third, it will require a review on how mobile banking and instant communications technologies impact depositor behavior and liquidity risk posed by financial institutions, and whether changes can be made to the discount window to better address the rapid liquidity demands that will be faced by banks in the near future. I feel like the last point is incredibly relevant, given the issues that we saw in 2023 with the collapse of Silicon Valley Bank. In addition to the bank's poor management, the firm had a concentrated depositor base that was tightly interconnected. My guess is that many of them were on the same signal chain. So when rumors began swirling online about the bank's solvency, depositors pulled $42 billion from Silicon Valley Bank within 24 hours, and regulators determined that if the bank had not been taken into receivership, around $100 billion would have been withdrawn the following day. The failure of SVB was followed closely by the failures of Signature Bank and First Republic Bank, and the failure of those firms resulted in record high amounts of outstanding loans from the discount window, more than $152 billion on March 15, 2023. To put that number in comparison, the maximum amount borrowed by financial institutions at any point during the pandemic was $51 billion, and the maximum amount during the 2008 financial crisis was $111 billion. So it's clear that bank runs can be triggered and can escalate more rapidly than ever before, and I believe it's essential to include this language in the scope of the review. In 2023, we saw a bank run take place at the speed of internet gossip. Within a few years, I believe this will be at the speed of artificial intelligence. Personal AI agents and financial advisors will have an obligation to their owners to move money to safety at the first sign of trouble. And I believe this can only make liquidity risks and bank runs more intense and contagious. So I support this legislation, and I hope my colleagues will support this constructive amendment. Thank you, Mr. Chairman, and I yield back.
Appreciate the gentleman from Illinois. Does the gentleman insist on his point of order? Gentleman from Michigan withdraws his point of order. Who seeks recognition on the bill? Ms. Dela Cruz? Strike the last word on the Foster Amendment.
Yes, I move to strike the last word. I rise in support of the Foster Amendment to H.R. 3390. It strengthens the underlying bill by improving the review of the discount window and adding a sunset clause for when the board's remediation plan has been fully implemented. I thank Congressman Foster and his staff for working with us to get the best possible version of this legislation. I urge my colleagues to support this amendment. I yield back.
Appreciate the gentlewoman's acceptance. Is there further debate on the Foster Amendment? Seeing none, then what's the question occurs on the Foster Amendment? All those in favor of the amendment shall say aye. Aye. All those opposed signify by saying nay. In the opinion of the ayes have it, and the amendment is adopted. We'll now consider another amendment. Dr. Foster?
Yes, I have an amendment at the desk that I'm presenting on behalf of Ranking Member Waters.
We have a Waters amendment at the desk. We'll wait for that to be distributed. The gentleman from Michigan reserves a point of order.
And this is a voice vote, too. We don't.
The clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3390, offered by Ms. Waters of California, designated as Waters 077.
Without objection, the amendment's considered read, and the gentleman, Mr. Foster, gentleman from Illinois, will describe Mrs. Waters' amendment. You have 5 minutes.
Thank you, Mr. Chair. We have heard minority depository institutions and other community banks express frustration with accessing various Fed facilities in the past. This was an issue during the pandemic when some institutions had initial challenges accessing the Fed's Paycheck Protection Program Liquidity Fund to help support their bank's work to deploy PPP loans to small businesses that needed them. During the regional failures in 2023, we heard from a number of banks that had challenges accessing the Fed's discount window. Our amendment here will help ensure that the Fed looks at various challenges in accessing the discount window, including operational issues, pricing, and terms of loans to help ensure banks can get access to emergency liquidity when it needs it. I've also heard community bankers express concern about the stigma of using the discount window, given that their participation is publicly disclosed 2 years after they get a loan. They're concerned that may be perceived as weakness and thus may be reluctant to get emergency liquidity, even if it is totally appropriate for them to do so. So my amendment would ensure that the Fed seeks ways to reduce this stigma to remove other barriers. I want to thank Chairman Hill and his staff for working with us on this in drafting this amendment. I urge members to support it, and if it gets adopted, I will urge members to support also the underlying bill.
Appreciate the gentleman from Illinois. He yields back. Does the gentleman from Michigan insist on his point of order?
I withdraw.
Point of order is withdrawn. The gentlewoman from Texas, strike the last word on the Waters Amendment.
Yes, I move to strike the last word. I rise in support of the amendment to H.R. 3390. It expands the board's review to consider the stigma associated with the use of the discount window and ways to improve access, operational efficiency, transparency, and the timeliness of the process for financial institutions seeking advances. The stigma is a widely recognized issue with the discount window today, and something that this committee heard expert testimony about in our hearing on the discount window last February. I thank the ranking member, Waters, for her engagement and support for the underlying legislation. I urge my colleagues to support this amendment. I yield back.
Gentlewoman yields back. Is there further debate on the Waters Amendment? There's no further debate. The question now occurs on the Waters Amendment. All those in favor? Oh, yeah. I guess that's, yeah. Let me pause on that. I'd like to speak on both the bill and these amendments if I could. I'll yield myself 5 minutes for that. I want to thank Ms. Dela Cruz for her good work on this bill. This is a bill that members on both sides of the aisle have been focused on and observing and taking testimony on and thinking through literally since the financial crisis when the Dodd-Frank Act and some of the improvements to try to prevent global contagion and setting a high standard on Federal Reserve policies and improved liquidity really did not do much to clear up the stigma associated with intraday borrowing from the Fed, the so-called discount window. So modernizing the discount window operations is a real topic of bipartisan agreement, and you've seen that evidence today with these two very important, helpful, clarifying and directive amendments, one from the gentleman from Illinois and one from our ranking member, Mrs. Waters. Last Congress, the committee held a hearing on the Fed's role as the lender of last resort. We heard from experts about several simple, pragmatic changes the Federal Reserve can implement to improve its efficiency in providing critical liquidity for solvent institutions facing times of financial stress. The discount window should be that central bank's primary tool for stabilizing the financial system in times of stress by ensuring adequate liquidity for banks with strong collateral. But in practice, it's been underused due to the stigma that's been addressed today by members on both sides of the aisle. We saw this quite clearly in the failures at Silicon Valley and Signature Bank. Instead of accessing the discount window early, banks delayed action for fear of sending a negative signal to the market, only to fail days later. Monitoring the discount window's operations can be changed in simple yet meaningful ways. Extended hours for institutions on the West Coast, streamlining operational requirements for pledging and withdrawing loan collateral, and updating the user experience will all help meet that goal. As Dr. Foster referenced, bank runs have gotten faster with the rise of social media. A few trending posts online can destabilize a solvent institution by spreading fear and distrust among depositors. This bill will ensure the Federal Reserve takes meaningful steps to address these issues and increase the transparency of this facility by carrying out a review of the discount window, submit a plan to Congress with actionable steps, regularly updating us on its implementation. For example, having looked into the Silicon Valley Bank case and others, personally, I hope that the Federal Reserve will consider the benefits of placing collateral pools, backing central bank lines on a blockchain application so that they're available 24 hours a day, 7 days a week, and that both the bank and the central bank will know the status of that collateral. H.R. 3390 is targeted, practical set of reforms that will build on the Fed's request for information on discount window operations and inform Congress on how we can strengthen our financial system's ability to weather the next storm. I thank members on both sides of the aisle, and I urge our colleagues on both sides of the aisle to support this bill as importantly amended this morning, and I yield back. Does anyone seek further debate on the Waters Amendment? If there's no further debate, we'll now ask the question on the amendment. All those in favor of the Waters Amendment shall signify by saying aye. Aye. All those opposed signify by saying nay. In the opinion, the ayes have it. The ayes have it, and the amendment is adopted. We will now move on to a next amendment on Ms. De La Cruz's underlying bill. Not seeing any other further discussion or amendments to Ms. De La Cruz's bill, the question now occurs on the adoption of her amendment in the nature of a substitute. All those in favor shall signify by saying aye. All those opposed signify by saying nay. In the opinion, the ayes have it, and the amendment is adopted. The question now occurs on ordering the bill as amended to be reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion, the ayes have it.
Mr. Chairman,
The gentlewoman.
I would like to request a recorded vote on my bill, please.
Gentlewoman from Texas requests a recorded vote. All those in favor of recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. The vote on this question is postponed. We'll now move to the next bill. Pursuant to notice, I call up H.R. 4460, the Stop Agency Fiat Enforcement of Guidance Act, which was introduced by Representative Muser, the chair of our Oversight Subcommittee. The clerk will report the bill, which was distributed in advance.
H.R. 4460, to require a guidance clarity statement on certain financial agency guidance and for other purposes.
Without objection, the bill is considered read and open to amendment at any point. The gentleman from Pennsylvania, Mr. Muser, you're now recognized for 5 minutes to discuss your bill.
Thank you very much, Mr. Chairman. I move to strike the last word. I urge my colleagues to support my bill, H.R. 4460, the Safe Guidance Act. This legislation takes a simple, common-sense step to prevent future regulatory overreach. It requires financial regulators to include a guidance clarity statement on their documents, making clear on page 1 that guidance is not binding, does not have the force of law, and that noncompliance alone does not create a legal violation. Operation Choke Point 2.0 exposed how Biden regulators quietly used informal tools like guidance to pressure banks into cutting off lawful industries, from crypto firms to energy companies to firearm dealers. This committee's Oversight and Investigation Subcommittee brought those tactics to light. For example, under the previous administration, the FDIC and the Federal Reserve issued guidance documents warning institutions about the reputational risks of serving crypto firms, creating a chilling effect throughout the financial system. Thankfully, during the Trump administration, much of that guidance has been withdrawn. But guidance shouldn't be used as a weapon. It should be an aid, a tool to help businesses interpret complex regulatory rules, not a means to intimidate and drive lawful businesses out of the financial system. So Congress has already made it clear it supports fair, transparent regulation for emerging industries. We recently passed the Bipartisan Genius Act and Clarity Act, affirming that crypto deserves clear rules of the road. Instead of supporting Congress's intent, Biden regulators tried to substitute their own judgment and force policy through back channels. Let's support the spirit of genius and clarity and ensure Congress, not unelected regulators, sets policy and laws for our financial system. Using guidance as a veiled threat is a regulatory overreach, and it must be corrected. So I urge my colleagues to support, and I yield back.
Gentleman yields back. Is there further debate on Mr. Muser's bill? Mr. Foster.
Yeah, well, I move to strike the last word.
Gentleman's recognized for 5 minutes.
I appreciate the chance to present the ranking member's views on this bill. Unfortunately, this bill is another partisan attack against the Consumer Financial Protection Bureau and an attempt to undermine their efforts to protect consumers. It's also an attempt to distract our other regulators, like the Federal Reserve and SEC, from focusing on their mission to promote a stable economy and to protect investors. This bill would require Treasury, HUD, and all federal financial regulators to add disclosures to an enormous number of written comments, statements, and posts the agency or agency officials make on a variety of platforms to stipulate that they don't have legal effect and entities cannot be prosecuted based on that statement. Of course they don't, but nevertheless, this would chill how these agencies communicate with the public in a way that could hinder guidance that could be helpful for industry participants to understand their legal obligations. In fact, it's unclear that Republicans want better guidance for the industry at all. Trump's CFPB recently rescinded nearly 70 guidance documents that the agency published to help entities understand what their legal obligations were to protect consumers. They've also dropped dozens of enforcement cases, and Republicans recently voted to slash the CFPB's budget in half. So forgive me for concluding that this is yet another attempt to chip away bit by bit at having a strong CFPB and other regulators who are fighting for the public's interest. Moreover, Republicans turn a blind eye to the reckless guidance that President Trump issues every day, if not every hour, on his personal social media platform. Meanwhile, they attack our regulators and try to make their jobs much harder to do. So I urge members to reject this misguided bill and yield back.
Gentleman yields back. Gentleman from Georgia recognized.
Thank you, Mr. Chairman. I move to strike the last word. I'm proud to support H.R. 4460, the Safe Guidance Act offered by Mr. Muser. Here's the problem. For years now, regulators have increasingly relied upon informal guidance such as press releases, letters, or even blog posts to steer market behavior or even upend decades of precedent. In many cases, that guidance has been treated by examiners and supervised entities as if it were binding law, even though it has not gone through the notice and comment process required by the Administrative Procedures Act. Not only does the APA support accountability, it also improves the quality of regulations by allowing public input prior to finalization. When regulators treat guidance as enforceable law, they bypass notice and comment, avoid judicial review, and deprive regulated institutions of due process. This is not how regulation should work. This issue is especially important when dealing with the CFPB, an agency that has consistently used guidance to reshape markets and reinterpret decades of precedent in everything from fair lending to so-called junk fees. This approach to regulation creates more confusion, compliance risk, and lack of certainty for financial institutions trying to serve their customers. Importantly, H.R. 4460 does not prevent the federal bank agencies from issuing guidance. This bill simply ensures the agency goes through a robust, transparent, and accountable process so that supervised entities know what guidance and what is enforceable law. That clarity is essential for the stable, predictable regulatory environment businesses need to make investments in their growth and in the growth of the economy. And I yield back.
Gentleman yields back. Who seeks recognition? Let me recognize myself for 5 minutes. I support the Stop Agency Fee Audit Enforcement of Guidance Act offered by Mr. Muser, the chair of our Oversight Investigation Subcommittee. The bill brings about long overdue transparency and accountability to how federal financial regulators issue and enforce supervisory guidance. For too long, the federal financial regulators have blurred the line between formal rulemaking and informal guidance. And this creates tremendous confusion in our supervised entities, our commercial banks, our credit unions. In recent years, financial institutions and firms have been expected to treat blog posts, frequently asked questions, and press releases as binding law, binding compliance obligations, even when they don't go through notice and comment in a public rulemaking process required by the Administrative Procedures Act. I don't know what's so earth-shattering about this. It is confusing. It is costly. And yes, as my friend from Illinois noted, one administration will withdraw a big block of guidance and another administration will admit it. And if we simply use the process that's been set up for 8 decades of going through a rulemaking process, we would have an open, transparent way to go about this. And as the gentleman from Georgia said, this has been especially true when it comes to the 15-year-old Consumer Financial Protection Bureau, which has repeatedly used guidance as a backdoor way to set up new standards, impose new liabilities, and pressure market behavior without any direction from Congress or following the requirements of the APA. I don't think we're breaking new ground here. I think what Chairman Muser is doing is common sense and way overdue. As a former community banker, CEO, both in public companies and private companies, as well as a former CEO of a brokerage in the brokerage business, this is vitally important. Vague, shifting guidance is not a rule, and it's certainly not a law. Financial institutions and firms should be able to refer to the Federal Register to clearly understand the regulations that apply to them. Instead, they waste resources on teams of attorneys who must sift through press releases and tweets to confirm their adherence to shifting compliance obligations. This bill fixes that by reaffirming that guidance is just that, guidance on an existing regulation, not something new or binding. This bill ensures that when regulators want to create binding obligations, they have to go through the proper rulemaking process. The APA is not a suggestion. It's a legal requirement that guarantees rules and regulations undergo a thorough process, allowing stakeholders to express their concerns and propose improvements through public comment. This will help market participants, especially community banks and credit unions, understand what's expected of them without fear of today's, open quote, suggestion, close quote, becoming tomorrow's enforcement action. All Democrats and Republicans should assess and rally around the rule of law, the end of the Chevron deference, and the fundamental clarity that is offered by the use of the APA as it's applied across the board, no matter what administration is in charge. I urge all my colleagues to support Mr. Muser's bill, and I yield back. Does anyone else seek recognition on Mr. Muser's bill? Hearing none, we'll move to amendments. Are there amendments to Mr. Muser's bill? If there are no amendments, then no further discussion. The question now occurs on ordering the bill to be reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Those opposed signify by saying nay. And Penn Chair, the ayes have it.
Mr. Chairman,
Gentleman from
I request a recorded vote.
Gentleman from Pennsylvania requests a recorded vote. All those in favor of recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. The vote on this question is postponed. We'll now move to the next bill.
Pursuant to notice, I call up H.R. 4544, the American Access to Banking Act, which was introduced by Ranking Member Waters. The clerk will report the bill, which has been distributed in advance.
H.R. 4544, to direct certain federal banking and credit union agencies to promote the formation of de novo regulated institutions through the review of application processes the review of capital raising by de novo regulated institutions, and the establishment of various outreach programs and for other purposes.
Without objection, the bill is considered read and open to amendment at any point. Ranking Member Waters has an amendment in the nature of a substitute, copies of which have been distributed in advance. The clerk will report the amendment.
An amendment in the nature of a substitute to H.R. 4544, offered by Ms. Waters of California, designated as Waters 076.
Without objection, the amendment is considered read and will serve as the base text for purposes of amendment. The gentlewoman from California, Ms. Waters, is recognized for 5 minutes.
Thank you very much. The number of new banks and credit unions called de novo institutions that were formed over the past 15 years has been very low. There are only 6 new bank charters issued annually the past 15 years, and only 29 new credit unions formed between 2014 and 2023. During that time, we saw about 1/3 of all minority depository institutions, or MDIs, disappear, including half of our Black-owned banks. Now, research from the Federal Reserve and others found a strong correlation between the interest rate environment and the new bank formation. In fact, we did have historically low interest rates at 0% for many years as we slowly recovered from the crisis. But there is more than we can do to help. Earlier this year, Rashonda Young testified before our committee about the challenges she is facing in trying to establish an MDI in Iowa. Ms. Young's story is remarkable. When she was a small business owner with a popcorn business, she tried to get a loan, and she was discriminated against by bank after bank. What did she do? She joined with other entrepreneurs and sued the Consumer Financial Protection Bureau for dragging its feet and not implementing Section 1071 to ensure we have a more fair and transparent small business loan market. Her lawsuit helped push the CFPB to finalize that overdue rule. But Ms. Young did not stop there. She decided to start her own bank so that she could provide the kind of small business loan to others that she was repeatedly denied for. Ms. Young's story is an American story. When you get knocked down, you get back up and keep pushing for a better way. Not only that, but you work to help others in your community so they can have chances that you never had. In her testimony, Ms. Young highlighted a few changes about the de novo process, like a lengthy application checklist. My bill would require these outdated procedures to be streamlined. My bill would also minimize duplicative data requests and require regulators to review capital raising challenges de novo's chase in consultation with the SEC. My bill also requires the designation of a caseworker as a single point of contact to assist de novo applicants throughout the process. H.R. 4544 further requires the development of outreach and education programs and federal regulated engagement with stakeholders, as well as coordination with state regulators to support them in chartering de novo firms. My bill has broad support, including from the American Bankers Association, America's Credit Unions, Consumer Federation of America, Defense Credit Union Council, National Bankers Association, and National Community Reinvestment Coalition. For any American like Ms. Young who wants to start a bank or a credit union, they should have that chance, and the American Access to Banking Act will help give them that chance. I urge members to support my bill, and I yield back the balance of my time.
The gentlewoman yields back. Is there further debate on the amendment in the nature of a substitute? Seeing none, I recognize myself for 5 minutes. I support H.R. 4544, the American Access to Banking Act offered by the ranking member, Ms. Waters. Every member of this committee understands the need for more community banks and the critical services they provide to our constituents. That is why I was happy to see the Financial Services Committee vote on a bipartisan basis in April to pass Representative Barr's bill, the Promoting New Bank Formation Act. I'm also pleased that the ranking member has offered this bill to help de novo financial institution applicants have the necessary resources to grow, sustainability, and safely. I have seen firsthand how excessive capital and regulatory requirements have all but choked off new bank formation in rural communities. The ranking member and Representative Barr have each offered approaches to address this problem over the past several years, so I'm pleased that both of these efforts have broad support from the committee this Congress. H.R. 4544 directs the federal bank regulatory agencies to take a holistic view of the de novo process and to provide meaningful changes that will make applications simpler and more seamless. This bill also ensures regulators are working hand in glove with applicants to provide technical assistance and guidance to avoid common mistakes and increase communication between the agency and applicants. Entrepreneurs already face enough hurdles when it comes to starting or investing in a new bank, and Congress has a responsibility to act where it can. H.R. 4544, alongside Representative Barr's bill, would help de novo bank applicants have a safe and durable on-ramp to success. I want to thank the ranking member for her tireless support of community banks and for offering this thoughtful piece of legislation. I encourage all of my colleagues to vote yes, and I yield back. Is there further debate on the A&S? Hearing none, we'll move to amendments. Does anyone wish to offer an amendment to the A&S? There being no further discussion or amendments to the bill, the question now occurs on the adoption of the amendment in the nature of a substitute. All those in favor shall signify by saying aye.
Aye.
Aye. All those opposed signify by saying nay. In the opinion of the chairs, the ayes have it, and the amendment is adopted. The question now occurs on ordering the bill as amended to be reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Aye. Those opposed shall signify by saying nay. In the opinion of the chair, the ayes have it. A recorded vote has been requested. All those in favor of a recorded vote, raise your hands. A sufficient number having raised their hands, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. The vote on this question is postponed. We will now, pursuant to the previous order, the chair declares the committee in recess, subject to the call of the chair. We will reconvene at 12:30 p.m. for votes. The committee stands in recess. All right. Thank you, sir. Yeah.
reconvene. Pursuant to the chair's previous order, we will now take postponed votes on the pending amendments to H.R. 3074. The question is on the fourth amendment offered by Ranking Member Waters. This is H.R. 3074-2. The clerk will open the vote. Is there any member who hasn't voted? Any member who would like to change their vote? Stand by. Ms. McLean? No, it happens every day. It's amazing. Is there any member who hasn't voted or would like to change their vote? The clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 21 and the nays are 26.
A majority having voted against the amendment is not agreed to. The question now occurs on the adoption of the amendment in the nature of a substitute. All those in favor shall signify by saying aye. Aye. All those opposed signify by saying nay. In the opinion of the chair, the ayes have it. The ayes have it, and the amendment in the nature of a substitute is adopted. The question now occurs on ordering the bill as amended favorably reported to the House. Those in favor shall signify by saying aye. Aye. All those opposed signify by saying nay. In the opinion of the chair, the ayes have it. For what purpose does the gentlewoman from Michigan seek recognition?
I have an amendment at the desk. Ask for a requested vote, sorry, ask for a requested vote.
The gentlewoman has requested the yeas and nays. All those in favor of recorded vote, raise your hand. A sufficient number having raised their hand of recorded vote is ordered. We will now take the vote on ordering the bill as amended favorably reported. The clerk will open the vote. Is there any member who has not voted or would like to change their vote? The clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 35 and the nays are 13.
A majority having voted in favor of H.R. 3074 as amended, the bill is ordered favorably reported to the House without objection. A motion to reconsider is laid on the table. We'll now take the vote pending on ordering H.R. 4478 to be favorably reported. The clerk will open the vote. Is there any member who has not voted or would like to change their vote? Clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 49 and the nays are 0.
A majority having voted in favor of H.R. 4478, the bill is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. We will now take the vote pending on ordering H.R. 3446 to be favorably reported. The clerk will open the vote. Is there any member who has not voted or would like to change their vote? The clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 26 and the nays are 23.
A majority having voted in favor of H.R. 3446, the bill is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. We'll now take the vote pending on ordering H.R. 3390 as amended, favorably reported. Members will vote electronically. The clerk will open the vote. Is there any member who has not voted or would like to change their vote? The clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 48 and the nays are 1.
A majority having voted in favor of H.R. 3390 as amended, the bill is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. We'll now consider the vote pending on ordering H.R. 4460 to be favorably reported. The clerk will open the vote. Is there any member who has not voted or would like to change their vote? The clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 26 and the nays are 23.
A majority having voted in favor of H.R. 4460, the bill is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. We'll now take the vote pending to order H.R. 4544 as amended, favorably reported. Members will vote electronically. Let me, I see people are getting up and leaving, I want to make two comments to all of you. First of all, on behalf of the committee and the staff, we want to wish all of you a very, very safe district work period. As you're home with your constituents and your families, we wish you a very good August. And also, I want to congratulate Mr. Garbarino for being elected to the chair of the Homeland Security Committee. Is there any member who, I'll let you take that up with him personally. Is there any member who has not voted or would like to change their vote? The clerk will close and report.
Mr. Chairman, on this vote, the ayes are 49 and the nays are 0.
A majority having voted in favor of H.R. 4544 as amended, the bill is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. Shh. Please exit quietly, thank you. Without objection, staff are authorized. No, that was exit quietly. Shh. Our clerks cannot hear. Shh. Without objection, staff are authorized to make necessary and conforming changes to the bill considered and pursuant to House Rule 11, Clause 2L. I give notice that all members have the requisite number of days to file supplemental, minority, additional, or dissenting views. There being no further business pending, the committee stands adjourned.